tracking from the world of commodities. But as I mentioned, China has announced a whole host of stimulus measures yet again, although this is not the first time that China has announced these kind of measures to boost the economy. But will it really move the needle? And gold is also off from its all-time high. And crude oil, after falling below $60 per barrel, has recovered yet again. But what's the outlook for all of these commodities? To discuss this, we now have Mr. Prathamesh Mallya, Deputy Vice President, Research, Commodities and Currencies at Angel One, now joining us. Mr. Mallya, thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about China and the recent stimulus measures that they've announced. As I mentioned, this is not the first time. They've announced N number of measures over the last 2 to 3 years, in fact, post-COVID. Will this really move the needle, and will demand for industrial metals inch higher on account of these measures that they've announced?
I think this is not the first time that China has been taking measures in order to boost its economy. But whatever is done in the recent week has almost infused close to around 1 trillion yuan in the financial system. So what it really does is it impacts the market momentarily. So if you're asking me whether it will have an impact on metals, yes, I think metals have got some bit of booster. But then there's a host of things that is happening across the global economy, right from tariffs to commentary on the Fed, plus oil prices going very volatile. So all of this is really having an impact on across the commodity sector, and all the commodity prices have been bamboozled by all these factors. But specifically, this measure by Chinese will really not move the needle. If you're asking me whether there's a base being that formed, it is not the case. A lot of things happening, and volatility will be the key going forward.
Okay, so that's as far as the Chinese stimulus measures are concerned. But do you expect that perhaps industrial demand metals from China, which is the biggest consumer of most commodities, will inch higher on account of these measures that were announced?
Significant boost just because of one measure. I think it really requires to put its acts together and do something more apart from injecting this money into the financial system. The stimulation has to come right from the demand side. Unless and until that happens, I think the Broadway rally in metals is yet far away.
Okay, so the broad rally is yet far away, and China needs to do much more than just stimulating its economy, especially when it comes of as far as demand is concerned. But let's also shift focus to the oil market. Brent crude fell below $60 per barrel last weekend after OPEC Plus said that it will be increasing supply by 411,000 barrels per day with effect from June. What's your forecast when it comes to Brent crude? And do you expect OPEC Plus to increase their output further for the rest of the year? And what's the downside risk that you see to oil prices going forward?
I think if you look at oil prices, $60 is wherein the base has formed a majority in the past. So it is like a make or break situation for oil producers. So if it falls below 60, the cost of production for these oil producers really becomes a worry factor. So in that sense, if you're asking me that there's a fall from current prices, I don't find it likely, because once it falls below 60, these producers of oil will have to shut down its taps, because oil prices going below cost of production is something which they won't like. So I am assuming that probably this is the bottom price, 60, 63 for Brent, and for WTI it's close to around 55 to $60 is where the possible bottom formation would happen. And I would see a possible rise from here on, although the volatility will remain depending on host of factors that is driving the global economy.
Okay, so you're saying Brent could be in the range of 60 to $65 per barrel, but if at all, if it were to once again increase production, or rather increase the production, do you expect Brent could probably fall to $50 per barrel if at all such an announcement were to come through?
If at all such an announcement were to come through, I think the supply side would become stronger, and taking into consideration the demand side that is happening, it would really push down Brent towards 55. That is almost a correction of 15 to 20% from the current mark. Looks unlikely, but then oil markets, the characteristics of this oil market is to remain volatile, and the factors would come in and go. But then 60 $5 is where the stability should come for Brent, and for WTI it should somewhere be around 58 to 60.
Okay, so 58 to 60 for WTI and 60 to $65 per barrel for Brent, and you don't expect them to further fall even if the supply concerns increase. But also wanted your thoughts on the demand angle, because there are fears that perhaps because of tariff, demand might come down, especially from China, which is the biggest importer of Brent crude. How do you expect Chinese demand to shape up going forward, and will tariff really have any impact on crude oil demand for the rest of the year?
I think if you're really asking the impact of tariff on the demand of oil, I think the demand for oil is purely inelastic. So whatever may be the price or the factor, their demand will continue irrespective of the situation. There would be minor hiccups as far as the impact of host of factors that is happening, but then I don't see any further impact of this particular factor impacting the oil prices.
Okay, so you don't expect demand to be impacted on account of tariff, and that continues to remain inelastic. But also wanted your thoughts on the yellow metal. Gold is now down significantly from the recent all-time highs of $3,500 per ounce in the global market, and trade tensions globally continue to ease. US has already signed a deal with UK, and a deal with China is also on the anvil. Do you expect gold to cool off further because of easing geopolitical tensions?
Uh, I think there are a lot of ifs and buts as far as gold is concerned, but then gold prices close to around $3,500 marks now at 3,300. It gives an opportunity for those investors who missed the rally. But then again, it would be difficult to pinpoint what exactly will be the factor that would result into correction in this yellow metal. But then, if you're really asking me whether you are a buyer at 95,000 in the Indian markets, I would stay away from this price. I would really wait for a meaningful correction, at least towards 85,000 per 10 grams mark for from an investor perspective. I would wait and watch for the time being, and let all the major factors play out, and then the stability should come, and then probably I would be invested in the yellow metal.
You are expecting some price correction before investing in the yellow metal, but what about silver? Because that has been an underperformer. It is also an industrial metal, but because it has been an underperformer versus gold, would you rather buy silver than gold?
I would recommend gold because the shine of this metal is at the top when compared to silver. So if you're asking me between gold and silver, I would prefer gold.
Okay, so between gold and silver, you would rather prefer gold, although you would wait for some kind of correction to perhaps add on to your positions. But within industrial metals, if you had to choose one, especially when it comes to the ferrous market, iron ore has slipped below $100 per ton. Where do you see steel and iron ore prices headed, especially because weak demand from China continues to hamper steel demand?
I am sorry, I wouldn't comment on steel and iron ore because we don't track these metals. But I would give you a comment on the copper, which is considered to be a benchmark for industries. I think with China taking this monetary stimulus, I think it would give some kind of boost to copper prices, and that is where my confidence lies.
So within industrial metals, you continue to remain very bullish on copper. So thank you so much, Mr. Mallya, for taking your time out and joining us here on ET Now and helping us decode what the implications could be of the recent Chinese stimulus that was announced by the People's Bank of China and its impact on the global commodity market. But with that, it's a wrap on this edition of Commodity Central. Don't go anywhere. Newsroom coming up on the other side. Stay tuned.